Hello, my name is Donough Kilmurray. I'm Chief Investment Officer here at Davy. For many people, investing can be a very vague or abstract concept. So we're going to try and show you what we do when you build a portfolio for any of our clients. It starts off by figuring out the client's needs and objectives. So how much liquidity do they need to get through the next few years' expenditure? Whether it's just simply running their lives as their businesses, how much cash they need or short-term assets just to get through the near term. Then we have what we call the core assets. This is the long-term portfolio that we build out of many different types of assets to achieve your long-term objectives, whatever they might be. And then lastly, we have what we call satellite, which is other assets that don't fit in your core or your liquidity, but you might want to do, for example, some stock trading, some private investing, some business investing, etc. And you put those all together, you get what we call your wealth allocation framework. Now let's look specifically at the core. What can we do to generate performance in your core portfolio? Well, the first most important thing is strategic asset allocation, the blend of safer assets, growth assets, alternatives to achieve your long-term risk and return. Next thing we can do is have a style bias. In our case, we don't go for the highest growth or the cheapest, we go for the most resilient, highest quality assets. Next, we can do tactical allocation. When the markets move, give us big deviations or big opportunities, we can shift the portfolio up or down in different asset classes. And lastly, instrument or fund selection. We can use active fund managers, we can use passive instruments or direct stocks to put it all together in a portfolio for you. What would that look like? Well, here we show what we call is a moderate growth portfolio. Roughly a quarter is in safer, although they can go down to low risk assets like bonds, which are more steady. Then we have in red equities, the growth assets, which can go down and up quite a lot, but long term the real source of growth. And lastly, alternatives, things like gold, things like hedge fund strategies, which don't behave the same as bond markets or stock markets. You put it together, you have what we call a balanced or moderate risk portfolio. Thank you very much. Look forward to doing business with you.